Hello, Bob, and thank you once again for joining us. Let's start with the major currencies. A relatively quiet week last week. Can we expect the same in the week ahead?
After a particularly quiet week on the economic calendar last week, it's a busy week ahead. For the US dollar key stat, we've got retail sales figures at the start of the week. That's going to garner plenty of interest. Obviously, consumption key. Focus will then shift to the jobless claims figures on Thursday, and then wrapping things up, the all-important prelim February private sector PMIs. Expect service sector PMI numbers to be the main area of focus. For the Eurozone and the Euro, well, pretty busy week ahead as well actually. Second estimate GDP numbers at the start of the week due out for Germany and the Eurozone, coupled with the ZEW economic sentiment figures. The focus will then shift to the end of the week where we've got the all-important private sector PMIs. Obviously expect manufacturing numbers from Germany and even service sector PMIs to also be key areas of focus. It will ultimately boil down to the Eurozone's composite. For the pound, it's also a busy week ahead. Key stats include inflation figures in midweek, and then the focus will shift to retail sales and the private sector PMI numbers at the end of the week. Retail sales and service sector PMI numbers, the key drivers for the pound.
So focus should be on retail and manufacturing and service sector figures for next week. But let's switch our attention to the commodity currencies now. What can we expect from the Kiwi, the Aussie and the Loonie in the week ahead?
For the Aussie dollar, relatively quiet week. We've got employment figures on Thursday and wage growth figures on Friday. Expect employment figures to be the key areas of focus. We've seen a pickup in consumer sentiment in Australia, so that coupled with improving employment conditions should give the Aussie dollar a boost. Obviously consumption key in terms of economic recovery, that's from the RBA's perspective. For the Kiwi dollar, it's a quiet week ahead. We've got wholesale inflation figures that will provide some direction, but not major, with private sector PMIs likely to have material impact on market risk sentiment. For the Loonie, it's a busy week ahead. We got inflation figures and retail sales figures due out. Expect the retail sales figures late in the week to be the key driver, though we also expect obviously the impact of private sector PMI numbers on crude oil and obviously the inventory numbers to also influence in the week.
So it looks like not much stats on those fronts too for next week. Let's switch our attention to Asia. What can we expect out of China and Japan?
For the Japanese yen, relatively busy week. We got fourth quarter GDP numbers out at the start of the week. How bad is it? Obviously, the Bank of Japan has, failed to deliver on its promises of further monetary policy support. So will this force the Bank of Japan's hand? Midweek, what trade data? That's going to garner plenty of interest. What's the global pandemic, what impact is that still having on trade terms and particularly the Japanese economy? At the end of the week, inflation figures are also due out. Obviously, deflationary pressures continue to persist in Japan, so we're not expecting too much influence there. For the Chinese yuan, it's Chinese New Year, markets are closed through most of the week, no economic data to consider, so there's nothing there to drive the markets through the week.
And lastly, geopolitical risk. Joe Biden entering into his 100 days as president. A lot of policy changes from the Trump era. How the markets react and what other geopolitical risks should our traders be looking out for in the week ahead?
On the geopolitical risk front, obviously the key area of focus remains Joe Biden and his first 100 days delivering on policy, US stimulus, foreign policy as well, obviously. How will he be handling China and obviously the likes of Iran and North Korea as well? Another area of focus, it should be the EU really, and we've got member states that have been, toying with the idea of pulling out of the EU. The vaccine woes over the last few weeks and the lack of supply and lack of coordination at Brussels, suggests, there may be some further consideration, at least by voters, to consider pulling out of the EU. So that would be an interesting area of focus as well. Those are areas really to consider, but nothing really to cause a stir in the market in the week ahead.
Well, that's all we have time for today, Bob. Thank you so much for joining us, and I'll see you again next time. That was The Week Ahead with Bob Mason of FX Empire. In the meantime, keep up to date with all the latest developments by following us on all our social media outlets.